All right, welcome back, everybody. John Caruso here. Today is November 8th. I am in the downtown Chicago office here. We're going to do a quick recap for you here this afternoon. Stock market printed new all-time highs again here today. I believe that's the 64th or 65th all-time high in the S&P 500 this year. We're at 46.95 on the SPY right now. We've got the NASDAQ at 16,352 and the Russell at 2440. The Russell, if you take a look at the monthly chart, very strong breakout on the monthly. We've been consolidating sideways since about March, and now we've got a breakout on the monthly chart that could carry us as high as potentially 2,600 over the course of the next few months. That's what the technicals are pointing at right now, so long as we can hold these gains for the month, and I think we will. Got a pretty strong day going in gold and silver here, as well as the dollar kind of cools off. Dollar's at 94.05. Gold is up $10 on the day, 18.27. And silver is at 24.56. That's up about 1.5% on the day. I do think you're going to see gold and silver start to run into some immediate term resistance. Gold roughly around 18.35, and silver I can get you as high as about 24.90 here in the near term before the market starts hitting some static, we think. Going into, of course, the inflation numbers, CPI and PPI. We do have CPI tomorrow, PPI on Wednesday, and we are on the heels of a what we like to call a Goldilocks non-farm payrolls number last Friday. 531,000 jobs were reported in the month of October. That did beat expectations of, I believe, about 450,000, and it also did topple last month's read as well. So Goldilocks number, it wasn't too hot, not too cold, just about right, just enough to keep the Fed at bay in terms of getting more aggressive on their monetary policy, or the market at least speculating on them getting more aggressive towards monetary policy going forward. So that's kind of where we're at from that regards. Of course, the Fed is going to taper. They've signaled that they're going to taper at least $30 billion in U.S. Treasuries, as well as in mortgage-backed security purchases going into 2022. That kind of brings me back to the 10-year yield. 10-year yield is bouncing here today. We're back at about 150 right now. We've got a very kind of a flatter look to the curve right now. The 30-year is down about 16 ticks right now, and you've got the 10-year down about 15 ticks. So you've got the 10-year gaining on the 30-year, a little bit of a flatter look to the curve, but going into the CPI and PPI readings, not a shock to see yields trying to stretch a little bit higher here. So we're going to get those inflation readouts tomorrow, and we look forward to hopefully delivering you another recap. That's all I have for you today. Feel free to reach out if you've got any questions, concerns. If you want to jump on our morning market insight letter, I'd be more than happy to extend a free 2-month trial into the end of the year. With that, good luck, and we'll catch you back here next time. Take care.